Mute that tab. And I'm going to go to the event. Well, we're live. We're on a green screen for a few minutes. How's weather in Arkansas?
Man, it was rainy Memorial Day. I'm gonna tell you what, we got 5 inches in 3 days. So
Oh no,
a lot of hanging out. Watched a lot of The Rookie. That's the show that we're on right now. And
oh no,
then,
that thing's. He's been a rookie for 7 years. It doesn't
forever.
make sense.
No doubt, no doubt. But the drama's high. A lot of shoot 'em up, right? A lot of fighting. But no, the big deal was the 5-year-old and the 12-year-old. The creek was high, so we made a boat and we got down and we sailed some plastic ninjas up and down the creek this week. That was the big deal.
That's awesome. We're getting the rain right now, and it's bummed because I bought a couch and I can't go get it because it keeps raining. So I'm like, oh, I don't have the couch because I have a pickup. I don't have a closed truck. No, we over this weekend, it was pretty Memorial Day weekend. All said, I had one of the kids at the grandparents. She wanted to have a sleepover, so that was actually really nice. I'm on a different show kick. So I watched the new Suits LA, and it was an abomination. Okay. It was an abomination. Okay. But I haven't watched Suits in like 5 years, so I'm rewatching the whole series, and I have it all on Blu-ray still. And I'm like, this is a good show. It makes no sense. It's just a bunch of drama, but it's fun.
Haven't seen that one, but I've heard good stuff about it. That may be our next one after.
I think the universal thing is every lawyer says nobody does this. Like it's the show all lawyers hate, but everybody else loves.
Right.
Well, let's go ahead. I think we're at time here, so we're going to introduce ourselves. Andy, thanks for coming on. My name is Logan Evans. I'm the CEO of TTS Cyber. We are a managed service provider specifically focused on cybersecurity and compliance, helping tech-centric companies, scale-up startups or cloud native, etc., secure their environment against an ever-growing threat that is out there right now, which is cyber criminals and all that entails, which we'll be talking about today. And Andy, go ahead.
All right. I'm the partner risk advisor here at Fifth Wall. And what I spend my day doing is working with MSPs across the country, educating them about their risk, their clients' risk. And Fifth Wall as a whole, we're a cyber insurance wholesaler that specializes specifically in cyber and MSP tech E&O. And we work with businesses small to large all throughout the country to help them quantify their risk and get the best cyber insurance possible for the right price.
I was going to say I'm wearing a sport coat and you got a hoodie on, so I think the dress code here we didn't align on that one. I'm like, you look better than me. Come on.
I'm gonna be a hoodie and a ball cap unless somebody forces me. Unless you go thumb screws on me, I'm hoodie and a ball cap pretty much every day.
It's all good. I'm a little jealous right now. So I mean, the big question for today, the title of the webinar is they thought cyber insurance was optional until a $700,000 breach proved them wrong. Stay tuned and I'll tell you exactly how that story played out. But the big question that everyone asks whenever we start talking about this is it even necessary? Is cyber insurance even necessary? Resounding yes from my part. What do you feel, Andy?
Yeah, resounding yes is an understatement. Yeah, I mean it's becoming a key coverage, just like general liability, work comp, any of the other business coverages that you carry. We're starting to see financial institutions, third parties require it, and not only that, we're starting to see the average breach. There are certain reports out there. I mean, everybody's got their report that we run to. We use the Sophos report quite a bit. That Sophos report showed that the average business in the $0 to $10 million revenue band last year had a $1.2 million average loss. So, I mean, that's that alone. The lowest revenue bracket is seeing average losses over $1 million. I would say that begs,
it's getting more expensive.
It's necessary.
I live in Columbus right now, and the headline last night was Columbus is trying to dismiss its data breach lawsuit. Basically, Columbus got hacked, and they lost 500,000 people's records, and they're trying to claim immunity because they looked at the price tag of paying out on this class action and said, oh, no, indeed.
Those notification costs that we talk about all the time, they're actual thing. We don't want to pay that.
Yeah, we'll get into that in a second. I mean, I used to hear this all the time, and unfortunately, I think that there's been so much prevalent education and knowledge. I'm hearing this less, which is I'm a small business. I'm not, there's nothing really that anybody really wants from me. And the answer I say to that is you have a bank account, right?
Correct.
Your money's not stuffed under a mattress somewhere. It's in ones and
Right.
zeros in a bank account. That's something that's valuable to a cyber criminal, and they are really good at digitally stealing it. That's what we keep saying. Like they get very creative when they realize they can steal the money via a computer. We've seen stats everywhere over the place. Ransomware is getting more expensive. I'd say business email compromise has not gone down. If anything, it's gotten worse. People keep clicking things they shouldn't click because they're just exhausted. They're getting spammed constantly by these people. I've gotten 6 phishing emails today alone. I just read the report before I got on here, and that's just today. 56% of incidents are experienced by organization, like the stat down here, were due to negligence. And when I say negligence, I don't mean gross. I mean people are burned out. They're making mistakes. Negligence is mistakes sometimes too. Hey, and the annual cost, you mentioned this before, the average cost for a small business, and averaging being between 1 and 500 businesses, is somewhere around 6.6 million. That 1.2 lines up with what I'm seeing too. A small business, by the time you get done paying all the damages and filing your 5 to 9 claims over the course of 6 months, it adds up to about a $1 million price tag.
Yeah, the cost is just continuing to increase, right? And I mean, the severity of the claims, the scope and severity both are increasing, right? We're seeing more claims and we're seeing larger claims both.
And let's talk about the scope of claims, right? And the money we're talking about, because that's what we're talking about today. At the end of the day, it's money. It's a money problem. Los Angeles fires happened earlier this year, and we're getting ready to go into hurricane season. So that, again, I'm thinking about property damages in my head. I have a place down in Florida, and I'm like, oh no, it's right outside of Tampa. Oh no. But thinking about the LA fires, right? We were seeing that, 17,000 buildings just damaged or destroyed, estimation of 32 billion in losses. That's a big number, right? 32.5 billion. And it is, to be clear, I'm not trying to minimize the devastation that happened out there.
Right.
But the World Economic Forum is saying the estimated damages for this year, 2025, middle year in, is around 10.5 trillion. Right. With the T. So there is so much going on. And so the first question we ask all the time is, why don't more businesses talk about this?
Well, a personal opinion for me is that so much of this happens that goes unreported because of embarrassment, reputation. I mean, there are so many people that are non-mandatory reporters that just choose to sweep this stuff under the rug, right? And it's wild because you read those stats, right? And then if you go out to a Chamber of Commerce meeting or a business symposium or whatever, right? And you ask from the stage, hey, who's had business email compromised or paid a ransom? You're going to get a bunch of alligator arms, right? Like nobody. But
nobody's going to raise their hands because their lawyers have all said there's no upside to raising your hand.
That's right. That's right. But then you go to the beer cart at the end of the conference and you start asking people, hey, man, has this hit you? And they're like, oh, my gosh, we were down for 10 days last year and it was the worst 10 days ever. And you hear that stuff regularly. So I think a lot of it is, people not wanting to be forthwith with, the information about their own information or their own, event.
Yeah, I mean, I met a guy last year. I was at an insurance agency conference meeting with insurance agents and talk about a tight-lipped crowd, no offense intended. Nobody's going to go on stage and acknowledge their mistakes, but, you get them talking. Mm-hmm. I'm talking to a guy about cyber risk, and, he drops me. He's like, yeah, I know. I lost $80,000 this year due to a business email compromise. And that guy was not – he didn't fess that up immediately. Took a little bit of talking with him. And, again, it's off the record. And the exact words is, I'm embarrassed. I'm not going to tell my clients or my partners about that. Like, what does that say about me? And that it really is the root of it. I think you're 100% right. 64% of businesses as of 2024 still were not familiar, or small businesses, I should say, small businesses, were still not familiar with cyber insurance. They didn't even know it was a thing. And then almost 1 in 2 of people who bought cyber insurance didn't buy it until after they got hit with one of those $80,000 things and realized, oh, I can get coverage for this, because they saw and they lived how easy it was to happen. I mean, there's some things to be said about life lessons teach you better than mistakes in life teach you better than any kind of schooling or lesson, right? And you make a mistake that costs you $80,000 and you see how easy it is to make that mistake, you get very, very, very motivated to not repeat it.
Yeah. And as far as the education piece goes, I mean, I believe that stat 100%. And I know that I live in a rural area. I know I live in the South, but put yourself in my shoes and go to the ballpark, the restaurant, work, church, wherever. And somebody says, hey, Andy, what do you do? And I say cyber insurance, right? I still get a lot of blank stares and people, I mean, like business owners that go, what is that? So there's still a lot of ignorance out there.
Let's talk about that. So the story of today is what I'm going to talk about, because I live in a relatively rural area too. Columbus is a weird spot. It's literally a big urban area and then cornfields all around it.
Right.
That's all we got. We got a bunch of cornfields, and it's great. I live in the middle of a cornfield. I'm not knocking a cornfield. Right. But there's a small town outside of Columbus. 7 people. Not 7 people. Wow. Small town, about 150,000, I think, when I looked it up last. So it's a decent little metro. Had a small department. And I am not going to go over anything that's not publicly available. So we're going to go down this on the publicly available stuff. Had a small nonprofit / governmental entity that managed their Parks and Rec department called the Granville Recreation District. That's the name of the city. Lo and behold, 7 people, about an operating budget of a little over $1 million a year. They got hit. A cyber attacker hacked their environment and managed to steal over $700,000 in liquid cash. It's more than half their operating budget, and funnel it overseas. Took the months, heartache, and pain, the 7-person organization, and sadly, and this again is public, they didn't announce it, they did have cyber insurance. Unfortunately, they underinsured themselves. They had $1 million coverage with a $250 cap on damages for fraud, and so they only got reimbursed that $250 because that's what the coverage was for. Yeah, and again, rural town, surrounded by cornfields, 7-person organization. Criminals made $700,000 on the top end of it before laundering. It is like shooting fish in a barrel, sadly, for the smaller areas, small businesses. So,
yeah, go
ahead, keep going.
Oh, I'm sorry. When you're talking about that number and the underinsuring, the 250 versus the 700, loss quantification is a major issue in our industry right now. Referring back to that Sophos report, a good amount of folks that have insurance filed that insurance only to find that they had no idea how much insurance to buy in the first place, right? And it's not necessarily anybody's fault. Very seldom do we see people that purposefully go, oh, you know what? We acknowledge that we have a $5 million risk. We're just going to buy $1 million of insurance. Most of the time, they have no idea that they have a $5 million risk, right? They're just buying $1 million of cyber insurance because they have $1 million of GL, and because they have $1 million of work comp, and they have $1 million of auto liability, right? So I go get $1 million of cyber too, and it's just habitual, right? Loss quantification for cyber, very, very hard.
Yeah, Niall said the same thing too, and this comes down to because there's not enough data. Back to the original point of incidents going underreported. Niall said 75% feels like it's a very conservative estimate, right? It's probably higher than that. And I would tend to agree. I don't want to throw in real numbers up there, but nobody talks about what they go through on this unless they are legally required to. That's basically the running rule of the street. Unless you have a legal mandate to go out and report yourself and go into detail, you're not going to do it because there's no upside. And I can't fault you because if you're a small business making that decision, because I would probably make the same decision, to be quite candid with you, that is a lot of baggage that comes along with it. And so what we're seeing is a push definitely between partnerships, both private and public. Hey, in your contracts, in your regulations, in your partner-to-partner agreements, you need to carry cyber insurance, because even though we're not talking about it, the people that are managing money are realizing this is a real problem. They're taking real losses and they're pushing downstream. Hey, get insured. So when something happens with you, you are not left carrying the bag because your partner got hacked. And we see that more and more. I see it with, obviously there's new SEC requirements of RIAs over in registered investors. They need to carry $1 million insurance. If you're a Charles Schwab investor, for example, they are privately mandating as of 3 years ago, hey, if you're a Charles Schwab RIA, you got to carry $1 million insurance. I'm seeing franchises more and more being required. I know healthcare, for example, if you're an elder care right now, so think of those elder care chains, so many of them have cyber insurance requirements in their partnerships because they know they're handling tons of data. They're elderly people and data. That's going to go really bad if they get hacked. I'm seeing partner-to-partner relationships. If you're selling to any kind of financial services, so business to business, the finance sector, they're throwing cyber insurance in the contract. It's just a mandatory, hey, no matter what contract you sign with us, you're agreeing you're going to carry $1 million plus of insurance, probably close to 2. Like you said, now I'm seeing more and more 2. I carry 2. So for that exact reason. So yeah, it's coming downstream very quickly.
Yep. And I'll tell you, going back to the franchise comment, right? buyer beware, right? Really look at what you're buying. We've seen scenarios where the franchise was mandating that the franchisee purchase cyber insurance, and they had set up this program, and here you can go get your cyber insurance, and it's only $1,000 a year. Well, guess what coverage was on that program? Third party only. Guess who third party only protects?
Your partner.
The franchise. Yeah, it protects the franchise from that partner's data being lost. It doesn't have first party coverage if your entity pays a ransom or has business income downtime or suffers reputational harm. So just buyer beware, especially if you're a franchise out there being mandated to purchase cyber insurance.
Yeah, I mean, I'm seeing it all over the place. Franchises is 100%. I'm seeing vendor and supplier agreements. I'm seeing MSP contracts. Hint, hint. Over here, I'm seeing partnership agreements, cloud and service. You want to sign up for a SaaS tool? They're putting on their T&C. Hey, you agree you have cyber insurance, and you're going to use that in case something in our tool ever goes wrong. Government contracts are huge. If you're selling to local, state, or federal contracts, it's basically a guarantee you got to carry cyber insurance nowadays. And then, franchise, healthcare, real estate, you name it. It's a shotgun of more and more the standard being applied to the industry is we want to make sure you're insured, and then putting the onus on the carriers to make sure they're actually doing some due diligence, which we're going to talk about in a second. Anything I'm missing on this though? To your
no, that's all great stuff. And I would tell you that list would have been very, very, very short going back to 2020, 2019, 2020, even 2021. That list is growing, and we're seeing more and more contractual requirements these days.
Okay. So let's talk about this, right? So contractual requirements and carrier requirements. Yay!
Yay!
So Andy,
everybody telling us what to do.
Everybody telling me what to do. Well, why are all these people telling us what to do? Well, let's talk about that. So Andy, explain this graph to our audience of what happened to most carriers in 2020 and 2021.
Yeah. This is a favorite soapbox topic of mine, right? Everybody, if you bought into the cyber insurance market back in like 2015, 2016 as a small business, you were very uncommon, right? You were pretty much by yourself on an island, and you probably paid $800, maybe $1,000 for cyber insurance.
I got mine for $500. I remember
there
that.
You go.
Yeah. $500 a year. Woo!
And almost no questions asked, right? Well, when COVID hit, cybercrime shifted down to Main Street, as we say, right? Losses went through the roof, and all of these policies that were written for pennies paid out in the tens, hundreds of thousands, sometimes even millions. So in the insurance industry, that affects what's called loss ratio, right? How much premium is paid in versus how much claims dollars, how many claim dollars are we paying out? There were individual carriers. I love your averages here, but there were individual carriers that operated for a year or more at over 110%, meaning that people paid in $1 and they paid out $1.10 in claims, right? You don't stay and play that game very long before you change something, right?
Economic 101. If you have no money in the bank to invest, you're not going to, as a carrier, you're not going to be in business much longer. That's kind of the whole point.
That's right.
You have a surplus to invest.
That's right. So, and you are going to see folks go insolvent. You're going to see people step out of the cyber insurance game if something doesn't change. So that's where 2022 into 2023, we saw major changes in underwriting, a lot more questions being asked, and a lot more carrier requirements on the cybersecurity side.
Yeah, I mean, that makes complete sense to me. Money in has to be bigger than money out for a business to remain solvent. That's any business, not just insurance. And we definitely saw that, right? Like premiums came in. We almost doubled premiums between 2024 and 2020, right? Like we went from an average of $4 billion a year premiums coming in to almost 7.1 coming out on average. Loss ratios dropped to 42%, however, compared to 73% in 2020. In 2020, you saw, like you said, average of 73 and higher, depending on the carrier. Well, now we've cut that down by 30%. And how do they do that? By tightening standards and underwriting process. And this is not new news, right? Like insurance carriers do this. It's true. I think you said in our last webinar, and I loved it, was the cyber insurance was finally forced to grow up. As an industry, we're forced to grow up and start acting like a regular one.
Right. Yeah. Start acting like other lines of insurance. I mean, think about auto underwriting. They're going to check and see your driving record, right? They're going to incentivize older, more experienced drivers with less accidents with lower rates, right? Home insurance. You got an old roof, you're going to pay more. You live in a floodplain, you're going to pay more, right? cyber insurance, like you said, I mean, was forced to grow up and start underwriting like the big boys do.
Yeah. So, I mean, this is what it comes down to. Standards change, times change. Cyber happened faster, I think, than most standards, but it still happened. Insurance companies are going to set those standards because they need to make sure they're turning a profit. Otherwise, they're not going to insure. And what do you do with insurance, right? When you get an insurance policy, they give you a set of standards. You either comply with the standards or you lose your coverage. It's not rocket science. It's been since time immemorial of insurance land. So first and foremost, let's talk about this. Cyber insurance is one of those things you should never assume. Never assume you have it. Guarantee you have it. Go find it. Because if you think, for example, your regular E&O policy, I want you to talk about this, Andy, has cyber insurance. I hate to tell you this, it probably really doesn't. And Andy, can you kind of explain more about what I'm talking about here?
Yeah. No, there's different levels of coverage. And a lot of times people confuse general liability with like, oh, I have general liability. It covers everything in general. No, it doesn't. It doesn't include cyber, right? Errors and omissions or professional liability might have some cyber on there. Honestly, Logan, the only time in my insurance history that I've ever had somebody tell me I don't have cyber insurance, I need it, and then we showed up and we found it. We actually found it on a medical malpractice policy as an add-on, right? And the customer didn't know to look there and they actually had really good coverage through the carrier. But more often than not, it's the exact opposite, where people think, oh, I'm covered for that type of loss under these lines, unless you have cyber specific language that's not exclusionary, that lines out. You have first party coverage, you have third party coverage, you have cyber crime coverage for funds transfer fraud and things like you mentioned, right? You don't have coverage. Your other lines of coverage are going to exclude those types of losses.
Nice. Yeah, I agree 100%. I've never seen, in my subjective experience, a business policy, a directors and officers policy, an E&O policy have significant cyber insurance. They might have a small add-on. I've seen that, like, hey, here's $100,000 for data breach coverage, right? Whatever that means. It's not a comprehensive policy. And people have gone to make claims, in my experience, on those, and they found out that the hard way of, oh, my entire event's not covered because it only covered $100,000 for this very specific thing and not big things.
Yes, it goes back to that loss quantification and knowing what you have, right? There are people that if they don't understand their loss potential, they may feel comfortable with $100K or $250K. And
sounds like a lot of money.
We call those the warm and fuzzies, right? In our industry, they see that word cyber, they see $100K or $250K, and they're like, yeah, I got it. We're good, Well, what's your actual loss potential for an average event? If it's 2.2 million, that 250K, you're going to be through that in days.
Yep. I'm honestly assuming it's even covered, because if you get, for example, a data breach coverage and you end up getting a fraud claim, right? Someone just stole money from your bank, and that's not a data breach. The carrier didn't insure that. You don't get anything, and 100%. Nor should you, because you didn't read the fine print. That's what I want to get at. What's changing? What does it mean for our audience? It means you're going to pay more money on the premiums. Now that's stabilizing, and I want you to talk about that more. It sounds like, from my experience, it's been stabilizing, but it's definitely higher than it was 5 years ago. The coverages are definitely getting more specific on what's covered and what's not. I think that's fair. It's less, here's a generic $1 million check, and more of, okay, here's $1 million in coverage, and here's some various areas where we're going to sublimit that because the risk is just so much higher for these areas compared to the $1 million aggregate. And then last but not least, the underwriting got a lot tougher. And I know that's also stabilizing a little bit, but I want you to talk about number 1, 2, and 3 for me. Give me a 30-second download of how that's changing right now.
Yeah, no, premiums are higher, but they're selectively higher, right? Like if you manage your risk well and you have good cybersecurity controls and you know how to go out in the market, right? I was doing a case study for a $50 million manufacturer the other day, and in a 10-year period, there's about $600,000 of premium that you can leave on the table, right? If you don't know what you're doing. So premiums are higher, but they're selectively higher based on your controls and market access. When you look in, flash that back if you don't mind. Put that back up there for a second. I've got the memory of a squirrel currently with all that's going on. Specific coverages, we are seeing the form get more specific, right? You want the most specific form that you can get, right? And you need to get with a specialist that can explain how your controls relate to those specific coverage, because there is, when we go into that, here's the tie-in to 2 and 3, more stringent underwriting standards. Do you have security awareness training? No, we don't. Okay, we're going to sublimit your crime coverages. Do you have multi-factor authentication? No, we don't. Okay, well, we're going to pull down your ransomware sublimit because we've seen a direct link between MFA adoption and ransomware claims, right? So the coverages are getting more specific. they're becoming more tied to your individual controls, and those underwriting standards. If you have the right controls, you're going to get better coverage with higher limits. If you don't have the right controls, if you're in a poor posture, you're going to have a Swiss cheese policy.
And basically that's what I got out of the too long didn't read explanation. What you just said, I heard is if you don't have, you're not going to get a blank check anymore. Like it's not happening. You need to have understanding of what you're signing up for. You need to have controls that the carrier approves. This is no longer the days of pay $1,000, get $1 million blank check. That's done. That's what I just heard. Cool. Yep. So and let's talk about claim denial, the boogeyman, the insurance space. And yep. I know there's always outliers, right? And I don't want to diminish the outliers, but generally speaking, these are the three reasons from my experience that I've run by you, and you'd say, yeah, this lines up, that I see claims denied. One is like in my story, you didn't have enough coverage. Sorry. Right. You went over your sub limit, and it ended up being you just didn't quantify your risk to properly insure yourself properly. Two, you went and did things that made the carrier incur more costs even without asking them. So you've been hacked. You've been doing things. You need to do something. And for example, without checking with the carrier, you say, I'm going to go hire the local IT guy down the street to come and rewipe all my computers and set them up from scratch. Well, the carrier is not going to cover the cost of the IT guy, and they might have some questions about you coming in and wiping their crime scene off before they can investigate themselves. That might affect your claim. Sorry, don't go off-road. Stay within the confines of the carrier's rules. And then last but not least, the compliance portion. We talked about standards. Some bad apples, willfully or otherwise, sign up for policies and say, hey, I'm doing all this stuff. And either they were at one point and they just let it lapse, or they never did it in the first place. And the carrier comes in and checks it and says, well, you told us you had multi-factor authentication. You told us you had an EDR client. And when we did our forensic analysis, they weren't there. And that would have made a material difference in this case. So sorry, but we're not going to just pay your check and walk away. We need to have an honest conversation. And again, your mileage may vary, depends on the carrier, depends on everything else, but that is a factor. Especially, I've seen it more on like the gross negligence side of you absolutely lied on your warranty.
Yes.
You checked the boxes because you just wanted to get your policy, but your policy wasn't worth the paper it's printed on because the carrier was operating off a warranty that was total garbage. That's been more often than not I see that one pop up. Anything to add to that?
No, I would say that on the, if you look at all these things in the composite, right? Like if you put them all together, there's a story to be told here that care on the front end drives down claims denied or drives down denials. And we see that within our organization, right? Loss quantification is a key piece to how we advise our clients. Like, do you have $1 million policy when you need 5, right? Pre-claim legal counsel, claim incident response planning, right? We encourage all of our customers to have those things in plan, right? Don't go off-road, stay within the lanes, right? And then lastly, get with somebody who has an application that's not binary yes, no, and then don't lie on that thing, right? And if all of those 3 things work together on the front end before you bind the policy, CFC just released a thing, and I'm not surprised. We're carrier agnostic, but this was a thing that hit LinkedIn the other day since we talked last, right? For 2024, CFC accepted and paid out 99% of their claims, right? Claims shouldn't get denied when they're underwritten correctly. The client doesn't lie. There are guidelines put in place, and people buy enough insurance, right? It can be done the right way.
So the only question I had about you is CFC saying claims are paid. Did they put another report out about our question of not having enough coverage? Were there any separate statistics about that? Okay.
No, it was just saying that they were paid out under the terms of the policy. Right?
That's still amazing. That's still amazing. I wanted to go into that, but that's exactly what you should be going for. If you're doing good efforts up front, documenting properly, showing compliance, and that's what I was going to say. You need to have a little bit of due diligence when you do the cyber insurance policy. Make sure you're testing honestly and being as open as possible about where you're at, and making sure that there's no room for misinterpretation or nothing that's squeaking under the table. You want things to be on the up and up, and you want things to go through, because when you want that policy to work, you really need it to work. When something comes that you need that policy, you are really going to need it, as we talked about, 1.2 being the average damages. So some of the standards I see on these forms, and I like how the change is coming from less yes, no. because it lets you kind of articulate some of this stuff and get it quantified better. You mentioned that, and I'm like, I'm a fan of this because I see some of the underwriting standards that get you the best rate and that get you in good with the insurance coming up, being in these categories, right? Do you have MFA turned on for your email and banking accounts? Do you have a business continuity disaster recovery plan that if your stuff gets knocked offline, you can resume business within 24 hours? So we're not paying loss of business interruption longer than a day or two. Or do you have a recovery plan for incident response? Hey, if someone does take a swipe at you, do you have a way to get back up and running and run your business while we're figuring out the rest of the stuff? These are all kind of, when you think about it for 2 seconds, we should have this, but they make you look really good to the carrier in my experience if you have them and you're able to articulate that in your application.
Yeah, 100%. And we've, the industry has matured, and there's still a lot of yes, no applications out there. There's still a lot of applications for inferior product that ask 5 questions, right? Mm-hmm. But you should be answering 20 to 40 questions. It shouldn't be all binary yes, no. There should be some ability to explain in there. And then I'll be honest with you, a little inside baseball here on the IR planning and stuff like that. What if your IR plan addressed ransomware, right? And it's centered around ransomware, but you have business email compromise and you pay out an $80,000 invoice? What then? What good's that IR plan at that point, right? What if your IR plan covers ransomware and business email compromise, but then one of your third-party vendors goes down and you're a car dealer and you can't do business for 2 weeks because CDK Global went down? Yep. So when we look at those 3 buckets, when we're talking IR planning from the insurance side, the majority of claims are going to fall under ransomware, theft of funds / invoice manipulation, and third-party dependent business interruption, right? Create a comprehensive incident response plan that addresses all 3, because you will respond to each of those differently, right?
For our clients, we make them scenario agnostic, meaning they can be, they're open and interpret enough that you can manipulate the steps to be whatever you need them to be. So it can be a ransomware address, and it can be, hey, we lost funds and we investigate. Like the process, the broad process still is the same, but the details, it leaves room for interpretation so we can make ground level decisions of, okay, this is how we're going to apply recovery. And you mentioned a couple times about this thing, and I want to, as we're reaching the top of the hour, we're at our time, risk quantification. It all starts with risk quantification. What is your risk? And how do you even get around, even close to putting a number on that, right? And to be candid with you, that's usually a journey. It's not just a simple step sometimes. It is, hey, I'd love it if I could say you have $1 million in revenue, so you need $1 million in coverage. Like that, as my story told you, that doesn't always work that way, right? 1.3 million budget, lost 700,000. If I had gone that traditional math of half your revenue and coverage, you would have still been holding the bag on something, right? Like you need to quantify it using risk analysis. So we recommend risk assessments. And this is where we join at the front end to help with partners like Fifth Wall. Hey, let's quantify your risk. Let's get a sense of what it really is and how much theoretically, worst case scenario, not buku hocus pocus numbers, real numbers, it could cost you in a worst case scenario. So when you go out and buy the policy, you have a range of what coverage you need to actually make sure you have your peace of mind. And we all started with our free giveaway. We have a free cyber insurance readiness assessment that'll help you do some of the basic steps for risk qualification analysis. And what we're going to do, Andy, is if assuming our audience scans this QR code or goes to ttscyber.net and puts it in, we're going to go ahead and give them the results instantaneously once they complete it. But B, we're going to set them up an appointment with Fifth Wall Solutions, assuming they're open to that, to talk about, hey, all right, I've got some risk qualification here. I've got a list of things I should be looking at as I go cyber insurance shopping and talking with the experts straight off the bat. So yeah, for our offer today, scan this QR code, get your free cyber insurance readiness assessment. It takes about 7 to 10 minutes to fill out in my experience, and get yourself started on the right journey to figuring out, A, if you don't have coverage, how much you need. But B, if you do have coverage, we should probably check to make sure you have enough, because things have changed. Things are changing.
And if you've been on today and you've heard Logan and I talk about Fifth Wall, and you've looked at my the bottom by my name, it says Yukon. You're going, what in the world? They're saying Fifth Wall, and Andy's name says Yukon. Part of the reason there is we have a tool coming in the name of Yukon next month. And anybody that signs up for that free cyber risk assessment will get a cyber risk report from our Yukon tool. That Yukon tool will generate a report that says, hey, in your sector, it's your revenue based on what we know about your company financially and the losses in your caveat or corner of the market. Here's roughly at 15, 30, 45 days down. here's what your average loss or claim paid out looks like, right? So Yukon, which is a tool that'll be available in June through Fifth Wall, will help generate reports from the financial sector and based in our claims that will help you. Again, there is no magic wand. We can't say this is the exact number, right? Because every breach has its own thumbprint. But based on the information that we have and based on the use of that tool, Yukon will be able to get you pretty close.
I love it. And thank you for reminding me, because that's a relatively new offering and we haven't had a chance to update everything yet. So we actually need to update Fifth Wall and Yukon logos.
Right.
Here's my final call to action. People, we don't need to do the hard push and the hard sale. Use your noggins. Most of the people tuning in for this call are seasoned business owners or executives or leaders in their industry, and they can see the writing on the wall. Just look around, right? The world isn't getting better, sadly. And when it comes to this particular kind of threat, I think it's getting worse. I just saw today, I don't know if you saw that, I think it was yesterday, that a court ruled that Delta can sue, what was it, their names, not CrowdStrike. CrowdStrike, thank you.
Yes.
Not Cyber CrowdStrike, because they caused billions and billions of damages. And that's just an example of the world we're running to, where I mentioned City of Columbus is trying to get out of paying the bill. Things are going to get more expensive, and the frequency of these kind of attacks, and sadly, is not going anywhere. I don't have to be a data researcher to say it and look around and say, hey, this is only going to get worse before it gets better for the foreseeable future.
Right. No, 100%. I appreciate you having me on today, man. It's always good to jump in and visit. And
absolutely,
love being able to nerd out on my favorite topic.
And yeah, good luck and congrats, by the way, on the Yukon announcement and beyond. You guys are getting a sneak preview. You're watching the webinar. Yukon's going live is it next week? Next week, right?
June the 8th. The PAX 8 conference is weird. It starts on a Sunday, right? So June the 8th will be launched. We're about a week and a half out. So stay tuned for that. There'll be a lot more coming out of Fifth Wall and Yukon.
Awesome. Thank you, everybody. Have a great rest of your day and stay safe out there.
See you guys.